Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Second quarter earnings reports keep rolling in, and as they do, our research director Shiraz Mian pulls out the trends in all of what's being talked about. And he's with me now to give us a little update on what's been going on here. So we have had some pretty noteworthy beats so far this season.
Yes.
I'm just curious, as I know maybe others are too, is this going to be the norm as we wrap up the Q2 season, or are these just one-off special cases?
It's hard to tell to extrapolate from some of these big positive surprises. But one thing we could say with a lot of certainty that the overall backdrop for earnings has improved. So whether that's the economic backdrop internationally, it's getting better. That said, I will say and lean towards the norm part of your question, meaning that this positive trend that we are seeing at this stage should continue through the rest of the earnings season. Now, when McDonald's comes out with extremely good numbers, that doesn't mean that the entire restaurant space is going to do good. Mm-hmm. The backdrop for them has improved, but then it comes to a question of management effectiveness and good execution of their plan for these outside surprises. But the overall environment is better for earnings.
All right, yeah, that's what I've noticed. Overall earnings seem to be increasing. Let's run down the numbers.
Sure. So I have the scorecard here. 128 S&P 500 companies have reported results already. Total earnings for these companies are up 7% on 4.2% higher revenues. 77.3% are beating earnings, and a very high 70.3% are beating revenues. And that's the S&P 500 line, the third from the bottom in this table. Just to put these results in some sort of a historical context, I compare what these same 128 companies had reported in the previous quarter, as well as the 4-quarter average and the 12-quarter average. And you could see that the growth is a bit on the decelerated side, meaning that the earnings and revenue growth for these 128 is below what we saw from the same group of companies in Q1, but about in line with the 4-quarter average and notably better than the 12-quarter average. The right-hand side chart shows the surprises, and you could see that they are doing pretty good.
And what about the beats, the beat-miss chart?
Yes, so the right-hand side chart over here shows that the 77.3% are beating EPS and 70.3% are beating revenues. This is notably better than what we saw from the same 128 companies in Q1, the 4-quarter average and the 12-quarter average. A very interesting chart that I have for folks here. This is the proportion of companies that are beating both EPS and revenues. And you will see that 59.4% are beating both of those metrics, which is notably above what we saw from the same group in Q1, 4-quarter average or the 12-quarter average. So companies are beating estimates at an above average proportion thus far. And that's notable because we know that estimates for Q2 had not really fallen by that much either. So the fact that estimates did not fall by that much and companies are still able to beat estimates is a key positive.
All right, let's talk sectors. Are the tech and financials leading the charge here?
I think they are. Not so much financials, even though the growth for finance is respectable. The outlook for the group for the current period was not that stellar. So the stocks, as they report, they have been going down. and the finance sector's performance in the previous quarter in Q1 was very strong, and that had kind of built up expectations, and the actual results haven't really come out to the same level. Tech, yes. Tech is doing a lot better, even though some folks may find flaws and issues with the Google report. I still think that there's impressive growth for a company that size to be growing its top line 20+ percentage points is totally impressive, and we saw some of that with the earlier reports from Adobe and Oracle and others too. And I think we should expect that momentum and trend to continue from other tech sector results too. On the laggard side, I would say staples aren't doing that good, even though it's relatively early on them.
Energy might be a risk, huh?
Energy is on the weak side as well, and definitely remains a risk, though again, it's relatively on the early side, and the overall numbers for the energy sector are so heavily weighted towards Exxon and Chevron that reports later this week, so we'll see. But yes, at this stage, energy companies aren't surprising at the same proportion as the rest of the index.
And we're talking here on July the 25th. So as of now, earnings seem to be driving the stock market?
There's, at any point in time, there's so many factors that drive stocks, but to the extent that fundamentals are a driver for stocks, I think it is a favorable, positive driver right now. This isn't something new. This has been happening for a while now. You would recall Q1 was a strong earnings season. The last quarter of 2016 was relatively on the positive side too. So earnings in a positive earnings picture has been a contributor and a positive driver for stocks for a while now.
Talk to me about the second half of 2017. What about earnings expectations going forward?
So the growth pace continues to decelerate, but the overall level of earnings remains very strong and very high. And I have a couple of charts to show here. The red rectangle is zeroing in on the 4 quarters for 2017. So we had double-digit growth in Q1, 13.3%. Q2 is on track to be 8% right now. My sense is that it will most likely be 9.5% when all is said and done. And estimates for Q3 have started coming down. So it's 4.8% as of today. It was about a little north of 6% at the beginning of July. I would expect that to continue, though, as I mentioned earlier, estimates for Q2 had not fallen by that much ahead of the start of their earnings season. I would expect that trend to continue for Q3 as well.
Is that worrisome?
So if we don't see that trend continue for Q3, meaning Q3 estimates fall more than what we saw for Q2, then it will be worrisome. We are not there yet, but estimates for Q3 have started coming down, and then 8.8% for the last quarter of the year. This decelerating picture may look a bit worrisome to folks, but they should keep in mind that we are in a very late innings of the overall earnings cycle, and the overall level of earnings is in record territory. In fact, Q2, the $288.9 billion. If we do get this or higher than this, this will be a new all-time quarterly record. And as you could see, the third quarter, 299.1. Is another record, and then the fourth quarter is a further record. So even though the growth is seemingly decelerating, the overall level of earnings is very high.
And as far as earnings are concerned, is a tax cut a 2018 event?
Most likely, yes. We don't really see any movement in estimates based on tax cut expectations, and to the extent there is any talk of that, That's for 2018 estimates.
All right, we'll check in with you at least one more time before this is all over
Sure.
with. Don't forget to keep up on the latest trends in what's going on with these earnings reports in Shiraz's written commentaries, earnings previews on Monday, earnings outlooks during the week. With Shiraz, I'm Terry Ruffalo.